Okay, so this is a very simple strategy using no indicators whatsoever. However, we will be using support and resistance and how to find these areas. So this is currently the GBP USD chart on the 1 hour, and you're just going to have to bear with me as we scroll back. If you look on the dates at the bottom here, let's just scroll back to the beginning of the year, just a random chart and a random time around about this area here. So I'll just mark it roughly from here. So what we're doing is, if you can imagine, you can't see the rest of this chart. You don't know where it's going, you don't know what's going to happen to it. Where's my line gone? Okay, so we're just assuming that from here this is the top of price action here. What we're going to do is we're going to wait for price to go down like it has, and we want it to come back up and hit this area here. What I like to do is to insert almost like an area rather than just one line. You see, we've took it from the top of the wick to the body, and as we carry on, price doesn't reach the area that we want. Now there's a couple of ways we can do this. We can maintain this level and say, well, if price isn't going to come back to here, we're just not interested. We're just not interested. Or we can say, well, there's a new high, a lower high just here, a new area that we're interested in just here. So there's two ways of doing it. You can maintain this level up here, or you can say, well, we're not so interested in this level now, we're interested in this one. Personally, there will be more opportunities if you draw these different areas. However, this is the main area that we're interested in. Let's just scroll forward in time and see what price does. So it continues to drop. And now you could say we've got a third area down here that we're interested in, that we're just looking at here. But again, my primary focus would be right back up here. But let's continue, because price has dropped quite dramatically. And now it's coming back up. Look, it's burst right through this area, and it's burst right through this second area as well. So it's made a really sharp move to the upside, and it's burst through all of our areas without stopping, and it's come right back up to this top area here, which is interesting because that was the area we was initially looking for. Noticing as well how when price drops, it respects this third area here. This is how you're just very basically finding areas of support and resistance. But it's this area here that we're interested in. It's come right back up to this area here. Oops. So what would we be looking for when price comes up? We don't know what price is really going to do. What would we be looking for? Well, it's come up here. This is the initial price. So it's come all the way up, and what we're looking for is a nice move up, a nice upward candle, followed by two downward candles. Now ideally the second downward candle and the first one wouldn't be too big. For instance, you see here you've got a nice upward move, but you've got a really big, two big candles, nearly 45 pips. For me, we've missed it. We've missed the sell. But here, it's perfect. We've just nudged into our zone, and we've got two down candles, neither of them being too big. It would be on the second one that I would sell. However, if you did miss it, if you missed it and you was in bed or asleep or out at work and you came back a few hours later and you noticed price was spiking into this area, you could sell anywhere up here. It would still be above the price that I initially wanted to sell here. So you could be 20 pips above what I was going to sell at. You would set your stop loss above the zone, at least 300 pips, probably 350 or 35 pips. That would be your stop loss up here, and you would look to take profit at 35 pips, which would be just here above your third zone. You would take profit. It would take a few hours, but you would not get much drawdown. You wouldn't get too close to your stop loss, and you'd make a nice profit. There are no indicators on this chart. We're just using price action. We're just finding our support zones. This strategy that I use can be applied to a buy, to buying the market. However, I mainly use it to sell, only to sell. But I could show you many examples of how you could buy the market using this exact same strategy, but we're just going to focus on selling the market. So if we carry on with price, you notice that it dips down and it touches this exact same area again. This time you've got your upward movement. Sorry about my phone. I've got my upward movement, and then you've got 1, 2 downward candles. Now the second candle is a bit large. It's probably a bit larger than I wanted, but you could sell at this level. You have to bear in mind that you've got this area here which has served as resistance or support before. If you was to sell here, you would be risking about 40 pips. You'd put your stop loss just above this spike here. You might even set it to 50 pips up here. If you was to sell down here, this is what happens. Price falls away. Obviously you would have sold here, so it wouldn't have spiked up there. You would have sold here, it would have gone this high, you'd have been nearly 30 pips down, and then you'd go all the way down to 50 pips around here, near the bottom, interestingly, of your third zone. So 2 sell trades there. Between the two of them you've made around 80 pips, which is a really good profit. We could carry on. Shall we carry on and see what the price does? Let's carry on. It drops dramatically down and comes all the way back up again. So comes all the way back up. I can't even see where my zone was now. My zone was actually up here. So price comes all the way along, and you'll notice that I'll draw it right across. Just make sure that I've got it. Yeah, I've got it right. So price comes up all the way to here, and you've got a movement up, and then you've got a rather large down candle and another one, the second one, as a confirmation. Now you are going to risk about 55 to 60 pips, say 60 pips. That is a lot to risk. If you was to sell here, it went down about 45 pips to the bottom of your third zone, 45 pips. You wanted 60. I mean, this candle here is rather large. I don't like it particularly. It's 25 pips long. This, you know, it makes me nervous when the movement down is that long, because you've missed so much of the move already. If we carry on, you'll see that if you'd have sold here and put your stop loss here, my goodness, you'd have just been tapped out, which is a shame because it comes back down again, and you would have got your, from here, you would have got your 60 pips almost exactly. But let's just say that you did take the trade and you lost it. Well, now you've got a new high. You've got a new high here, and this is what's interesting. Price comes down and doesn't touch it. It doesn't go near it. So again, you've got the option. Do you insert another zone here? Can you see how we're making zones here as we go along? Notice now, look, here's your zone, but price just bursts through it and actually goes above it and rests. But interestingly, look at this. Look at this zone here. It goes up, but doesn't give you the two down confirmations, so you wouldn't take it. You could take it here, where it goes up, just pokes its head out the top of your zone, and gives you 1, 2 down. Your stop loss, you could put it at about 300, which would be just above this spike. You'd be looking then to get 300 profit, which you would get easily. However, there's something about this that you need to take into consideration, and this is why people like indicators, because it's almost like an indicator is a definite alert, whereas when you're trading on what's called a naked chart with no indicators, and you're plotting your own areas of support and resistance, what happens is you have to make your own mind up. You have to almost get a feel for the market. Sometimes you're just going to get tapped out. This here is almost like they're trying to stop anybody who's got a stop loss above this zone here. Look, they tap you out and then immediately reverse the market. But they know that there's stop losses up here, and the market wants to try and just test it and tap out anybody and collect the profit that's sitting above this zone. Hopefully, if you was to do this, you would put your stop loss. The reason why I say 300 is because, you know, here's the spike. You want it above 20 pips. You know, I usually round it up to 300. You know, I like 300, 400, 500. I don't like going, you know, 250 or 150, you know, or even 350. If I wasn't going for 35 pips, I'd go for 400. Yeah, I'd rather risk 400 than 350. I don't know why. It's just me. You know, everybody's different. But at the very least it would be 300 or 30 pips, and I would be looking for 300 profit. If I set it for 400 or 40 pips, I'd be looking for 40 pips profit. So this is how finding support and resistance. It's relatively easy. Sometimes the markets are really messy. I mean, this is a bit of a mess, but at the same time, look, it's bouncing between the bottom of this zone and the top of this zone. So you know, although it looks messy, there is actually structure to it. And in Forex trading, that's what you're looking for, some kind of structure. Even here, look, if we was to extend this zone, look what price does. It comes back and tests it. So if we were to have entered here and we took our 40 or 30 pip profit, price has dipped from the high and it's touched this other zone that we was interested in. Notice it's done an up move, then a big down move and a second down move. Now again, I don't like this big down move. It's literally nearly 35 pips long. I don't like it because I feel like price is too far away from the zone. It's too far away. Yeah. I would prefer to sell the market near my zone, not right down here. But you know, you have got technically an up move and then 2 downward candles. You could sell here. Let's see what price does. So if you'd have sold here, you see you'd have put your stop above this. You was like 50 or 60 pips at risk. Yeah, okay, you could have got 50. You could have got 50 pips, but I don't like it. I'd rather have sold up here near the top. You're selling down here. You could have made profit, but you would have ultimately lost it again. What happens is, again, price bursts through this zone and seems to find interest up here again. Now, again, in this zone here, you've got a really big up move, and then you've got 2 downward candles. But again, that one's not so big, but the 2 combined are 25 pips long. Just measure it from here to the top. You would risk 40 pips. Yeah, maybe. I might be happy risking 40 pips. I might be happy risking 40 pips. Plus the fact that price has gone into this zone again and it's burst through my second zone. It's burst through it, which means there's quite a downward move. It's gone through 2 zones. If you were to sell here on this downward candle, you're looking to get 40 pips. Would you have got it? Yes, you would, relatively easily. I won't make this video too long, and I'm sorry it's going on, but this is quite an important video in a way. So price comes down, it bursts back through this zone again. It bursts back into this zone. You've got the upward move, but this time you've only got 1 downward candle, and then you've got an up candle. So this is not a valid sell, even though you would have put your stop loss at, say, 40 pips. You'd probably got 30 pips, but it's not a valid sell for me. Price dips enough We're not looking for little dips, by the way. We're looking for, you know, if you go from here to here, that's nearly 50 pips. That's a good move down. Yeah. And we're looking for a good move up again. Look, 55 pips moving back up again. And this time you've got a lovely strong upward candle with two small downward candles. This is actually probably my perfect trade of all the trades we've looked at. Upwards and then two downwards. You'd go in on this candle here. You'd be setting your stop loss not at 200, not at 20 pips. It's a bit too close to the spike. You might go above here. Now I don't like going at 25, so I'd go at least at 30 pips stop loss, which is right up there, way above this spike, and you'll be looking for 30 or 300. You'd get it instantly, well, not instantly, but within a few hours, easily. So in just these few zones that we've drawn up, how many winning trades have we had? You know, how many winning trades? Not this one, not this one, but we would have got one here. We wouldn't have got this one. There's no valid trade. I wouldn't have took that one, but I'd have took one here. So that's two valid trades. Then I took one here, three valid trades, all winners. I wouldn't have took that one. That one wasn't valid. I would definitely have took this one. Did I say three or four? 3 or 4 valid trades, all the way down again. Lovely, lovely trade, that one. And then of course we just move on. Look, we just start plotting new zones here to be looking for. But remember that when you're plotting these zones, ultimately the highest zone is the one that you're interested in. If price doesn't come back to your upper zone, so what? So it's not a valid trade. You know, this is going to be your strongest level here, not this one and not this one. This is your strongest level, and if you look at this, you know, here's a great trade, and here's a great trade, all from this upper level that you plotted earlier. It doesn't mean that this can't be a great level going forward, but I mean, look at what price does. If you go all the way over here, look how it respects it. As it happens, there isn't a valid trade for me here. There's not two down candles, and this candle here is too long. I don't like it, so I wouldn't have took it. And there's not a valid trade here really. I mean, possibly here, but that isn't a strong up move candle for me. That's just, you know, a nothing candle. Even though you've got two sell candles here, this one is not a strong move up. This one is, but this one here, no, not really. You know, and if you did take it, this is the beauty of having just two smaller moving down candles. If you did take that trade, you'd set your stop loss at 20 pips or even 30 pips up here, but you're not going to lose an awful lot if you did take that trade. Here's the interesting thing as well. You've plotted this level here, and price did move all the way down and came up to here. You've got a strong up move with two downward candles. That looks like a great trade. That does look like quite a good trade, even though this up move here is massive. I mean, it's indicating that your trend is going down and now it's going to reverse, and it obviously does. But again, even if you took this trade, you're going to be looking at, say, 40 pips. So, okay, you've lost 40 pips. Again, every trade isn't going to work out. And again, when you're not using indicators, you have to use almost what you see on the chart, and you have to get a feel for the chart. And also you'll realize as you practice trading that because this strategy might work really well on the pound versus the dollar, it might not work so well on gold, or it might work really badly on the US dollar against the Japanese yen, but it might work really well on the euro versus the dollar. You see, because charts move so differently and they're affected in so many different ways. For example, if you was to trade the Australian dollar, that's affected by gold. So if gold suddenly drops in price, the strength of the Australian dollar will also be affected. The reason being because gold is mined over in Australia. So you have to be very mindful of how markets move and whether or not the strategy that you're building works well. And just because it doesn't work well on one chart, on one currency pair, try it on another, just to see. You never know. But I mean, this literally brings us up to today. And if you notice here, look, we've got a new high. And because I'm only interested in selling using this strategy, I'm looking at this zone here. Now, price dipped. Yeah, it dipped a reasonable amount and came back. But look, I've got an okay up move, not great, but the down move was too big for me. I don't like it. It's too far away from the zone. I'd rather wait to see if price comes back and gives me a valid entry to sell. If it does, then guess what I'll be doing on the pound USD? I'll be selling in this zone maybe this week at some point. If not, then who cares? Who cares? Part of trading is developing patience amongst other qualities. And this is what I like about trading, that it teaches you qualities that can also be useful in other areas of your life. To develop the quality of patience while trading will give you that quality when you're dealing with others, or when you're driving a car and you want to get somewhere and you're running late. The quality of patience could save your life. Bit dramatic, but you know what? Trading can teach you these qualities that maybe school has failed to teach you, or maybe that your parents have failed to teach you, or that you've just never been interested in developing as a person. So develop it. While you're trading, be mindful that you can develop qualities that could actually be a life skill that can give you advantages in life, whether it be going for a job interview or dealing with others around you. So I hope the video has helped. This is a video dealing with 0 indicators, no indicators at all, just using price action and mainly looking at selling the market only. Of course, this strategy can be used to buy the market just as effectively as it can be to sell the market. Again, test it for yourself and see what you think. I hope you've enjoyed the video.